Hello again, everybody. Jason Veenstra here with the Veenstra Real Estate Team. You know that my channel is all about helping people make wise real estate decisions. And today I wanted to jump on a call here with my friend, Jeremy Drobeck. Jeremy is a lender with Amerifirst Home Mortgages here in the Kalamazoo area. And we've seen a lot of different things going on in the market recently. So I thought it was important for all of us, buyers, sellers, people who are still renting, people who are thinking about buying, to really get a feel for what is actually going on, why is this going on, and what can we expect here in the future. So Jeremy, thank you so much for jumping on the call with us today.
Yeah, no problem. Thanks for having me. I love getting out there and getting the message across on what's going on with the market. So let me just kind of dive into it here. So if for those that have seen the news or haven't seen the news, yesterday the Feds had a meeting and they hiked the Fed's fund rate 0.75%. That's what you see in the news. Feds hiked the Fed's fund rate 0.75%. What does that mean? It's actually a really good thing for the mortgage and the real estate industry. And so what's going on here kind of behind the scenes is we've had a lot of inflationary concerns lately. And if you've been watching the news, you've heard all about inflation, gas prices going up, food prices, everything's going up in cost, and that's inflation. And the mortgage industry does not like inflation. So when there's inflationary fears out there, that puts upward pressure on interest rates. And what we've been experiencing really since about January is just concerns of inflation, and then seeing those concerns come to reality. And we've watched mortgage rates move higher. Rates that were at one point in the threes are now, now up 6% in the sixes. And so it's been a tough bullet to bite for some home buyers. And it's great to see the Fed taking action now to help stabilize things and bring things back into reality. So let me just show you real quick what happened yesterday after the Fed announcement and give you a little bit more detail. I'm going to share my screen here real quick.
Perfect.
Okay. So what I've pulled up here, this is, people always have different conceptions on what mortgage rates are based on. And what the true answer to that is mortgage-backed securities. And what I pulled up here is a chart of mortgage-backed securities and how those have been tracking. And I'm going to zoom out just a little bit, just to give you a little bit of history here. So what you're looking at, mortgage-backed securities have an inverse relationship with interest rates. So when you see it going down on this chart, it means rates are going up. And when we were back in the threes, and even twos a year ago, we were hovering around here is where the pricing was tracking. And since, November, we started to see some upward movement in rates. And when we got to January, they really started to move a lot faster in that upward direction. And this is when all the news of inflation started to first come out. And if we zoom in here to more recently, so we had moved back up, rates had moved back up into about the fives in this range. Okay. And I'm being real general here. Everybody's qualifications are different. There's a lot of different factors that go into this, but generally speaking, we're hanging out in the fives. And last week, at the end of the week, some inflation reports came out with the Consumer Purchase Price Index that were more negative numbers than everybody was hoping. And we saw rates jump up significantly, and we landed in the sixes, low sixes. And now fast forward, so that was Thursday, Friday, Saturday, Thursday, Friday, and then Monday and Tuesday, we saw a lot of upward movement in rates. There's just a lot of negative news there. And then the Feds had their meeting and they hiked rates 0.75%. And you can see right here, we saw interest rates improve. That is because Wall Street loves it. I mean, they want to see the federal government keep inflation in check. By raising that Fed's fund rate, what the government is doing is they're trying to decrease demand. So when you raise the cost of borrowing money on things like credit cards, car loans, home equity lines, stuff like that, if it costs more on a monthly basis to purchase an item because you're financing it, you'll buy less. In general, you'll buy less. And so by raising that Fed's fund rate, they're looking to curb demand which will curb inflation. And that will be a very, very, very positive thing for mortgages in the real estate industry as a whole. So I say go buy. I mean, if the time is right and you're whatever you've got going on in your life fits, don't worry about rates. Don't worry about the price appreciation and all the stuff going on out there. It is still a good time to buy a house. There's still certainly money out there to lend, and we're here to help people navigate that process.
Really appreciate you kind of covering that. There have been so many different sources of information that we're all trying to kind of piece together what this all means, and the inverse relationship of the mortgage-backed securities and interest rates and all of those things. So thank you for helping to clarify that a little bit. For those people who have actually already been pre-qualified or pre-approved, what's your recommendation to them? Should they be reaching out to their lender? What's the process for them?
Yeah, absolutely. That's a super valid question. I mean, if they've just talked to their lender in the last couple of days, they're good to go. But if, a lot of people out there have what I would call a stale pre-approval letter, right? I mean, it's not, it takes a minute to find a house these days. And if it's been a couple weeks or a month or, 3 months since you've talked to your lender, I would definitely call them, say, hey, just want to see where we're sitting. Can you give me some updated payments and how much have things changed? Over the last couple of days, it's not a lot, but if it was somebody that hasn't updated that pre-qual letter, a pre-approval letter for, a couple of months, they should definitely be checking back in and just making sure everything's still good to go.
Awesome. Well, thank you again. Really appreciate you taking the time to just kind of run through what's going on in the market. If you are thinking about buying a home, reach out. I'd love to have that conversation with you. There's a lot of factors that go into it. Like Jeremy said, there's still money out there to be lent to you so that you can purchase, but there's a lot of factors that go into, is the time right for you? And I'd love to have that conversation with you. Until that time, make sure that you are staying safe, and we'll talk to you again next time.